The richest 1% own more wealth than the bottom 50% combined. It isn't just a fluke or a matter of a few lucky breaks. It's the result of a process baked into our economic system, a process where money, once you have enough of it, grows faster than the economy itself. Today, we're going to explore why wealth snowballs at the top and whether it has to be this way. French economist Thomas Piketty made a deceptively simple observation. In most of the history, the rate of return on capital R is greater than the rate of economic growth G. Capital earns returns through stocks, real estate, business, bonds, often 5 to 8% a year. The economy and wages typically grow at just 1 to 3%. When R is consistently greater than G, those who already own capital see their share of the pie grow faster than everyone else's. Imagine two people. Alex works for a salary, Jordan owns a portfolio of investments. If both grow their income at 2% above the inflation, Alex's salary doubles in about 35 years. But if Jordan earns 7% on investments, their wealth doubles in just over 10 years. Over a lifetime, the difference becomes a gap so wide it can be breached through wages alone. The wealthy also have access to better investment opportunities. Private equity, venture capital, complex tax shelters. These aren't options for most people. Meanwhile, many households have no investments at all or carry higher interest debt paying out money instead of earning it. Assets like property and stocks have generally grown faster than wages. If you own them early, you ride that wave. If you don't, the wave pushes the shore further away. In housing markets, this means young people face skyrocketing entry costs, locking them out of the very assets that could help them build wealth. More wealth means more influence in business, in politics, and in media. That influence often shapes laws and policies to protect the growth of wealth through lower capital gains taxes, inheritance loopholes, and favorable corporate regulations. It's a loop that reinforces itself. In many countries, wealth isn't just earned, it's passed down. Inheritance means some people start their economic lives far ahead while others spend decades catching up, and many never do. Why it matters? When wealth concentrates too much at the top, social mobility declines. Political power tilts towards the wealthy, and the economy can become unstable, as in 1929 and again in 2008. How we can change it? Some economists argue for wealth taxes, stronger inheritance taxes, or universal asset building programs, giving everyone a stake in growth. Others push to raise the rate of economic growth through investment in education, infrastructure, and innovation so that G can catch up to R. Wealth snowballs at the top because the returns on capital outpace the growth of wages and the economy. It's not just luck, it's structural. The real question is this simply how capitalism works? Or is it a choice about how our economy is designed?